Good afternoon, everyone. Thank you for attending the session. So the whole idea here is to share um our journey as Zaggle and what we've learned over the years as we built the business. Right. So we are a SaaS Fintech. We digitize spends. We are profitable. We are listed. We raised a second round of QIP, qualified institutional placement, recently. And we wanted to share how we've been able to achieve those milestones in these current circumstances, right? So one of the things that we've all seen when it comes to Indian fintech scene is that there's a lot of bullishness, there's a lot of euphoria, all good, everything is fabulous. But in reality, you'll also see that there are challenges, right? So what's the momentum? What's the reason why the markets are bullish about what India has? We all know there are lots of things happening on the digital penetration side, the India demographic dividend. We've got digital public infrastructure, and we've got a lot of payments kicking in, right? So these are things which all of us know. But the key challenges here are also very acute. We've seen the challenges, the funding winter. I don't know how many of you are running startups here. Anybody who's running a startup? So if you're working in a startup or running a startup, I'm sure you would have come across some challenges in raising capital, right? And the expectations of the investor community has changed substantially from the time when the world was very different. And I'll take you through some of the stages and explain to you why these changes have happened and how we have been able to cope with these changes, right? So from a fintech perspective, there's a lot more focus on compliance as well. Anybody running a fintech here or working for a fintech? Yeah, so you would probably relate to what I'm saying in terms of the regulatory demands, and that's become pretty acute. And it is what it is, right? So how do you cope with those changes? And what have we done to be able to cope with those changes? Yeah, and this list is not exhaustive. The challenges are dime a dozen, right? So if you look at the evolution of the startup ecosystem, right? There's a time where you could raise money with a business plan, and this was the dot-com era, right? And then came a time where a business plan was not enough. You needed a little bit of users, and you'd get away with it, right? And then you got to a stage where you needed to get some traction, right? Just a business plan, users was not good enough. You needed traction. You needed to show engagement with these users. You needed to show that these users are actually having some affinity to your platform, right, or your product. Today, the game has changed where to get funded, you need to go beyond, one step beyond that. You need to be able to show actual positive unit economics. How are you going to generate profitability? So it's not enough to have a business plan. It's not enough to have an app or a website. It's not enough to have traction. When I say app, website, I'm saying a minimum viable product. You could have payments plugged in. You could have all those pieces. But investors are actually demanding that you should have a path to profitability and positive unit economics, right? So that's what I mean when I say you cannot get away with just an app or a business model, business plan. You need to be able to show that you have these users on which you are able to generate some revenue and you have at least positive unit economics, right? How many of you are familiar with the term unit economics? I hope some of you have heard of it, right? Now, generally, the unit economics definition that's given is LTV by CAC, lifetime value divided by the cost to acquire a user. Fundamentally, I think this definition itself is changing. This thesis of LTV is become a red herring or a wild goose chase, right? Because what is LTV? What is lifetime value for a user? Very hard to pin it down, right? So what I'm going to share with you is a slightly different version of this. What we believe is how the market is actually, how the angels, how the seed funds, how the VCs are actually looking at this. They're not looking at your lifetime value divided by CAC. They're basically saying, hey, look, what's your revenue over a course of 18, 24 months, minus your cost to acquire, minus your cost to serve, right? And if that is positive, then you got positive unit economics. So there's a subtle but different, critical difference. You've added the cost to serve angle here. It's not just cost to acquire. And the other difference is that you're now talking of a lifetime, instead of a lifetime value, you're reducing the time period to a certain time period. And depending on your business and your product and solution, you're going to turn it around and say it's 18 months, break even is 12 months, 24 months. But it can't be an infinite period of time where you're going to generate money by acquiring a user first by burning cash upfront, and then you're going to be able to make money through cross-sell and upsell. That story is over, my friends, right? So thesis has changed, markets have changed, and the expectation now is that you'll be able to work on a positive unit economics on this sort of a formula, right? What did we do? We tried to monetize across board. So one thing that worked well for us and continues to work well is not to try to monetize only on software, but to monetize on transactions, on software, on merchant commissions. We've started to do some finder's fee through lending, through partnerships. So trying to monetize 360 degrees is what has worked well for us. The other thing, I think, which is a very important concept, which is often missed in startups in India is, are you looking at deep profit pools? This is a critical piece today, and there's a beautiful paper in Harvard Business Review on profit pools. Came out a few years ago, but it's become very popular in the recent past. I would highly recommend you go through that paper if this is of interest to you. But in your business, how do you identify sustainable profit pools? The cue that I would share with you is, don't shy away from complexity. Areas where there is more complexity, where there is more opaqueness, generally there is possibility that you would find a profit pool there, right? And a deeper sustainable profit pool. So that's how we have looked at it. Do not go after areas that are more glamorous. A glamorous piece may or may not have profit pools. Generally, a glamorous problem tends to attract a lot of eyeballs, a lot of attention. So your profit pools are likely to shrink faster there because more competition would be there. Look for areas where there is complexity, where there is scale, and it may or may not be very, very glamorous, right? So understanding your market segment, are you dealing with India? Are you dealing with Bharat? Are you dealing with the global audience? Are you dealing with California, India? And you can't be turning around and saying, at an early stage at least, that, hey, I'm building a product or a solution for everybody. मेरा solution सबके लिए है. आपका solution अगर सबके लिए है, तो आपका solution किसी के लिए नहीं है, right? So you can't do everything for everyone or something for everyone, at least at an early stage. An Amazon sort of a company is very different, but to reach there, they started off with a very defined, value proposition for a certain defined target group, right? What else? Yeah. From a fintech perspective, especially, know your customer, own your customer. Those are things which anybody who's in the banking, fintech, insurance, even telecom space knows the importance of that. I don't want to talk too much about it. And the other last piece that I think which is very important is, don't be dependent on a select set of partners. If you're talking about, I want to build a solution where I have API integrations, broad base your partnerships. Otherwise, you're going to very likely get into trouble. We've seen a lot of fintechs in our ecosystem get into trouble because a partner bank had issues, and that has made life difficult for them. So this is something which I tell every fintech and every fintech founder, that customer is king, but compliance is bap. at least in fintech. Don't take chances. Aaj nahi to kal, you will be caught with your pants down if you're not careful. And all gray areas are no-go areas, as Dilip Asbe said. I think I got that quote there. Yeah, unless it's explicitly said yes, it is a no. I think more and more with DPDP coming in. How many of you are familiar with DPDP? Yeah, great. So DPDP is basically the Indian version of GDPR. It's about data protection and data privacy. The bill is, I think, in final stages of being passed by the parliament. And once that comes in, you're going to see a lot of the same compliance expectation from companies who are in new age businesses, whether or not you're in all digital businesses, whether or not you're a fintech, whether you're an insurance company, doesn't matter. You could be just a pure play D2C brand or something. Your compliance requirements on DPDP are going to change fundamentally. So do take your compliances very seriously at an early stage because that could be your moat, that could be your differentiating factor as to how the market perceives you, right? So what did we not do? A lot of our success was in doing things that others weren't interested in doing or didn't find it glamorous. And, things that others found it exciting, we stayed away. Just to give you a sense from scale perspective, today, market cap wise, we are somewhere around 6,500 crores. We are about 15 partner banks, 3,200 customers, 3 million users. So, and when we listed at 164. We are hovering around somewhere around 520, 525 right now in about 15 months. So the market has appreciated the fact that we've been very focused on what we are delivering, right? So a lot of fintech specific stuff, so I'm not going to go too deep in this, but do look at, the general thesis would be, do look at what you should not do more than what you should do. That's many times is critical, right? So as I said, we work with 15 banks. We have the largest issuer of prepaid cards in the country in terms of spends. We are the number 3 in corporate credit cards or commercial cards. We are a spend management company, so we help large enterprises and mid-market customers manage their employee spends, their vendor payouts, their channel spends. And this is a little bit about the overall solution set. We do also do fleet programs for companies like Adani Gas, for Pratham. We do international payments through Forex cards, along with vendor payouts, employee payouts, and channel payouts. Okay? So that's about Zaggle. Happy to take your questions. Thank you.